Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with another new set of highs in some of the stock indices today for Wednesday, the 3rd of October, 2018. And it just all boils down that we keep getting economic reports that I write about. They're already in my morning reports. And if you watch my morning video, I went over a bunch of those numbers there. Suffice to say, it's one bullish thing after the other, even with interest rates soaring. Yeah, they're soaring. There's no ifs, ands, or buts. They are just moving up rather dramatically as the world realizes our economy's good, everything's good, employment is good. Amazon raised price of hourly wages, and the market's looking at all that. That, of course, weighs on the gold market, and the reason is inflation isn't the theme yet. That's the problem for gold. It's fighting the higher U.S. dollar, higher U.S. interest rates, and that combination is fighting what? All the foreign currencies. So they've been slipping back and slipping back rather aggressively. If you look at the energies, you had a heck of a big build today come into the to the EIA. I was thinking API in my head. To the EIA, way more than the market thought. Almost 3 times as much. The market broke down, and I am telling you, you could just see the triggers. Everybody was buying, buying, buying. So this market's in a buying mode, obviously due to what's going on between the U.S. and Iran, and the U.S. today breaking another treaty with Iran. So this situation's getting worse and worse instead of better and better, and it's probably going to stay that way right into November 4th when this next sanction level kicks in. If we look at a weekly area chart of closes so far, the market hasn't closed over, and it won't today either. 29.34. Yes, the market's open after 3:30. However, the settlement price is determined at 3:15. So it'll trade from now to 4 o'clock, but we already know the settlement. I wish I could do that in the real market and know those things. In any case, you're still very much in an upthrust in this market. We do have something of a distribution pattern. If you take a look at that, this is what I call distribution. Back and forth as the market's charging around. You still have the pattern of higher lows and higher highs. That's bullish. Any way you want to look at it, that's bullish. The 18-day average of closes in red, the market's over it. That gives it upside bias. Where do you think the resistance is? I say it's at the upper Bollinger Bands, and that's what the market's having a heck of a time getting over. It's unable to push them out. So we have a market that goes up, challenges those bands. Today, the Bollinger Band is 29.45. There is no 20. 29.45, you round down. And if you look at the high today, 29.4475. So you don't have to believe that I'm the one looking at this. There's plenty of others that understand how this technique works. Got the higher highs, higher lows. I think that you might see tomorrow this 18-day average of closes get over this 29.17.5. Be interesting. If it does, gives you a pretty interesting spot as to where the pros on the breaks might be looking to say that's the support, and break under it could be a problem for it. When we come into the slow stochastics in terms of momentum, any number over 70 I consider overbought. Now, overbought, there's nothing magic. Maybe to you. To me, it is. And what that does is it stops my trigger finger from wanting to pull. And the reason it doesn't want to pull is because the market's overbought. I wait for that situation to rectify itself. That doesn't mean other people do. So I'm going to view the market as bullish. Momentum is certainly up, but overbought. Bias up, trend up, but hitting resistance points and having trouble getting through it. Same can be said for the NASDAQ. It went back up today, challenged the upper Bollinger Band, pulled back. It's got a gain, but it too is overbought with the same pattern of higher highs, higher lows. Very much, if you look at the broader dark bands, They're pretty big sideways ones. They're not real narrow, but that's your resistance point on the top side. The Dow is the same thing. The Dow gets up to the upper Bollinger Bands, pushes it out, breaks back, comes back up today, got up today to 26,966, missed the upper band by 20 points, and pulling back. It's still higher on the day, but you get the idea of where the resistance is, and that's very important. And the one thing in common, these markets are very, very overbought. We then get to the weak sister here, which is the Russell. And the Russell is starting to finally make a little bit of a story. It got under yesterday, and let me see if I can bring this up. Here it is. Sharply under the lower Bollinger Band. And the market had broken under it the day before. What happened, I think, is once it crossed the 100-day average, people just threw in the towel. They didn't see the support. Now you're bouncing back into the Bollinger Band. I would think resistance is back at what was support, resistance now, 1691, the 100-day average. When I look at the momentum of the market, both numbers today that make up the slow stochastic are under 20. They were under 20 the day before, not the day before. You need 3 days in a row for the market to embed. Embed means locking in the trend. Most markets don't embed. So I would not be surprised to get a little correction in that market. In the VIX, I'm going to be broken words again. What do I mean? When the market was going up, I was telling you that one of the things I was observing was I can't prove it, I think the pros are selling calls as the market's getting up to the upper Bollinger Band, buying them back at the 18-day average of closes, selling them when they get down to the lower Bollinger Band coming out here. I don't think they're playing it for back and forth. I'm telling you what I suspect. I suspect the same thing is going to happen if you can get to 1107 thereabouts. In the lower Bollinger Band, you're about 50 points away from it. That is where I think they're going to come in the other way, which could set off a correction down in the stock market, maybe a little bit up here. Don't know if we'll get there or not, but it'll be interesting to see. Look at this bond market. And this is what I mean by saying the line in the sand, bearish crossovers. I know terms that you hear about, but you often don't understand them. And momentum pointing down, but oversold. And you're there. You went down. You're going to hang around that lower Bollinger Band. This got to be the highest interest rates of the year right now. 10-year did the same, oversold to the lower band again one more time. TLT come crashing through everything. But even without today's action, you had a pattern of, what, a higher high. You were trying to set up a lower low. It happened today when the market opened and took out yesterday's low, and that just cratered the market. Still very bearish patterns here, which are bullish the dollar index, which is challenged the upper Bollinger Band. If you take a look where you're at, 95.57, you're just trading over the upper Bollinger Band now in an overbought market. What am I going to tell you? Yeah, I think the pros are taking some money off the table up there. Let's flip-flop it. Eurocurrency. Doesn't mean it can't go lower, but now that you're down here, I wouldn't be surprised to see the pros not selling it short here, taking money off the table if they are short. British pound, I'm expecting that challenge of the lower Bollinger Band still. Whether it hits it or not, you're just points away from it. Momentum down, trend down. These currencies are not holding up against the dollar. And even the yen tried to stick its head up today. Couldn't do it. Had an outside day down. Took out Tuesday's high, then low, and let go to the downside. If we take a look at the low, it's 87.80. 87.80 is the lower Bollinger Band, too, that area. So you look where you're at. You're 82.5 is the Bollinger Band, to be specific. I think some money's coming off the table after that sale. Bitcoin. I pointed out yesterday the sideways action of Bollinger Bands, and the market is stuck at the 18-day average of closes. However, the overall pattern is interesting in that it's still friendly. You have higher lows, higher highs, you can see that. The market's stuck at that 18-day average of closes. If it broke down, I would look for support at the lower Bollinger Band. The more interesting part to me is that big break in the market. Until something else happens, this market is saying, you know, it's more of a coiling market for whatever the next move is than now trending. In the crude oil, obviously every time Iran and the U.S. go at it, you're getting a bid into the Brent, and today's no different. You can see how it's gaining on the WTI crude. You can see how the market comes up, gets under the lower Bollinger Band, comes back and challenges it. You're over it today by about 30 points here. At the end of the day, it looks like you're going to be over it or on it in the crude oil, but all uptrends, as you can see, on everything. This market pulled to the right-hand side of it, but you have the embedded reading. Till that's lost, it's still bullish. And nat gas, once you got through there, and I'm so happy that you watch because it just caught the market. And this has been a vertical price rise that I think has got a lot of people with their mouth open, wondering what next. I'm going to be writing my silver report. I haven't written one in a while. I wrote the gold recently, so now I'm going to go do the silver. I'm going to start it tomorrow. If you're not on my mailing list and you want this, you better get it because it's not posted on our website. You get it via an email, and in order to get it, we need your mailing address. So if you're interested, I'm going to cover a lot of detail in this one. I'll be talking about historical prices, the price counts, the seasonal charts, what I'm seeing right now that's impacting the market, and of course interest rates and the dollar index, which are not impacting the silver. It's coming alive. How do you get it? Call us. Go to our website, www.iraepstein.com. You can click up here if you're watching me on YouTube. That'll take you right to our website and do it there. I'm Ira Epstein. Thanks for watching. I'll see you tomorrow.